it's me. Hey, Angela. Anytime you want to just come on the mic, Angela, I'll pass the mic to you, okay? I'd like to know what's happening with oil. So we've got some, okay, all right, that's fine. We've got some really big prints on oil today. And one of the things that you can do is, you know, we talk about strangling things when we don't know the direction. And one of the things that you can do on something like this, where we're getting large prints across multiple names. Oh, well, it is blank, isn't it? All right, it says it's connecting. I guess, wow, this morning I had instantaneous upload. And it's taking a little longer, so bear with me. It's time to short Comcast, you guys. They're just not up to the task of doing this. Okay, while we're waiting, XLV has made a new high of the day by a penny. And let me just try this again. Okay, that's better, huh? All right, so you guys can see my screen now? Not that I have anything important up yet. Oh, let's see if, there we go. So you guys can see the news too. Okay, so for anyone new, my name is Ricki, and I'm here to talk about my favorite subject, options, and my favorite saying, which is options have options. I don't believe that there's any one specific way that is right in trading options, that it really depends on your personal style of trading, as well as what is happening print-wise. And we like to really tie a lot of our trades to prints. And so to that end, I started talking about oil. And we've got tons of oil-related prints. That DBO, which was an oil ETF, was huge. We've never seen anything like it before. But there's tons of other oil prints coming in. And so one of the things that you can do with options is a strangle. Those of you who have been here have heard this, but for those new, I do not like straddles, only because you're paying the highest amount of extrinsic value for those at-the-money options. However, having said that, if your particular stock and the options only offer you that opportunity and you really want to take it, then go ahead and do that at your own risk. And what I mean by if that's the only opportunity, what I'm talking about there is that that's the only strike price that has the liquidity that makes your trade viable. By all means, use that instead of some strangle that there is just no liquidity, because it's always easier to get into a trade, but it's harder to get out of the trade. And part of the success of any trading is that you have someone to take the other side of the trade when you're ready to exit. So I called out a J-hook in this XLV, and we just broke above, so that's one to definitely watch. So in terms of a strangle, one of the things that you can do is, you know, we've seen that large print on DBO, and if I go to an options chain, looking on the options chain, and I go to DBO, and I haven't done this yet, so I wasn't even sure if there were options on it, and it looks like there are. The first thing I note for me personally is, well, are there weekly options? And here I see October, November, Jan, and April. So this does not have weekly options. So right there, that means I'm not going to trade it. But that doesn't mean that you can or can't. But that's not within my trading rules. And to show you why, when I open it up, you see, here, look at these sixes, for example, 6 calls. That's a $1.10 spread on a $3 option, so it's a third of the price of the option is the spread. It's a little bit better as you get closer to at the money. Here it's only 30 cents on the 7, and on the 8 calls it's 20 cents. But that's still way too much. And besides, I look at the chart and I don't know how much this thing is going to move. But we have plenty of other oil names that they are going to move. And so the thing that you want to do when we see these series of prints is then you could pick a favorite oil name that you like, for one thing, but you can also do somewhat of an arbitrage situation where you pick a really strong oil name to take that, to buy calls on that one, and take the weakest oil name that you can find and buy puts on that. And to a certain extent, the oil sector, you can't see my screen? Is everybody else seeing it? Okay. Let me know. Shout it out if you can't see my screen or my voice goes bonkers. If my voice goes, it's you can never know if it's the microphone or the operator, but you have to understand that there's different factors or different subsectors within the oil field. You have your exploration, you have the drilling, you have the retail, you have refining, and so you can't quite compare all of them. And some of them are multifaceted, some are very very limited in what part of the oil sector they are. But for the most part, you could pick and choose some strong names and weak names, short as in buy some puts on a weak one and buy a call on a strong name. And then if we do get a pop overnight, for example, that's when you want to do a strangle as a day trader. There's different ways to do strangles and straddles, but for most of you in here who are in here day in, day out, you don't even have to take that risk of am I right in the direction, because the next day, sometimes later in the, an hour later, sometimes it starts moving 5 minutes after a print, sometimes it moves an hour later, 2 hours, sometimes a week later, but you're here to watch it, so you could just wait for your entry. But if you can't, these are the times you can do a strangle, or that we've had so much that there's a higher probability than not, than say a normal day where we just get little prints coming in and out, that there's a higher prospect of possibly getting a gap overnight or at least a major movement. And so you want to go ahead and buy some options before they start becoming very active. And as options get very active, the implied volatility goes up, and so you pay the higher price. And so that's when you want to think about doing perhaps a strangle. So that's that's my spiel on oil, and I'm really looking forward to Angela talking to us about oil, because we could do something. I just have to check this out just because I saw this. And okay, so what do you guys want to talk about? Anything in particular? I told you, David, I have nothing prepared. Okay. Please, what is the difference from buying? When you buy a strangle, I am buying so a straddle and a strangle, they're sibling trades. Straddle and strangle. And, you know, for the most part, I don't like to get hung up on names of these strategies. I think it's much more important that you understand what they are and the concept behind them instead of getting the name right. But at some point, like learning any foreign language, we do have to study a little bit about the language. But in both a straddle and a strangle, you're buying a call and you're buying a put. And what that does is that if you get movement, if you discount the time aspect, okay, so really putting it simplistically, any time that your option, a basic option, goes up in price, so if something goes up in price by $1, the price of your option will increase, as in go up, by 1 delta. If it goes up the next dollar, so plus one more dollar, then it goes up by another delta plus a gamma. If it goes up another, then on top of this one and this one, so in other words here, this is like 2 delta plus a gamma. If it goes up 3, now you're up 3 delta plus 2 gamma, roughly. Okay, this is just simplistically. Now when something goes down, if your stock goes down, as in the opposite direction of where you want it to go, not necessarily down, because if you have puts, you know, going up, the price of the stock going up is actually against you, so that's going down. But in any case, if the price of your stock is going in the opposite direction of where you want to go, that first dollar, you're going to be losing 1 delta. The next dollar, you're going to be losing that delta here plus another delta, but minus, this time it's going to be a minus a gamma. And then the third one, you're going to be losing 3 delta, but minus 2 gamma. And so here you can see that it's the difference of these gammas that your one that is winning is going to be increasing at a higher rate than the one that is decreasing. And that's what gives straddles and strangles their profitability. If in an option, if you didn't have this gamma component and all it was the delta, you would never get above break even, because for every drop in your call, for example, you would have an increase in your put and vice versa, and it would just stay straight across. But because of that gamma component of the options pricing is where you make money on your straddles and strangles. And then the only difference between a straddle and a strangle is that in the straddle you're using the same strike price, and in a strangle you're using different strike prices. That's the only difference. Okay. So let's see. Back to questions. Where did I start, or where did I end? Okay, so Blessing, does that answer your question? I think you were the one that asked about strangles. My favorite oil, actually I haven't looked into that Blanca yet. I was going to do that after Options Corner to see if I really even want to put in a trade, although, you know, what I'm probably going to do is just wait till tomorrow if we don't see any kind of real direction. But with KMI reporting, I think we're going to just get some really good volatility in the next several days in the oil names. So I'm personally thinking of not putting in any kind of strangle and just waiting and doing some day trades in the next several days on oil names, because I think we're going to get some great volatility. In terms of some of the oil names that I have been watching, and kind of watching Halliburton, if, let's see, maybe this might be easier to look on this. Look at a daily. So this is one that I've kind of been looking at. This isn't the greatest view, but what I'm kind of looking at is possibly a formation of a cup and handle here. And then if we ever break out, it's going to be, if we break up to the upside, it's going to be a good trade. Come back here, and then we come down here, then, you know, that's going to be, oh, well, that's a double top and we're heading down. So I'm kind of watching that longer term for an entry. I have no entry. I have nothing in the works yet. My favorite oil name to trade is SLB, Schlumberger, and that pretty much I just day trade on a regular basis and do some swings. I got burned, I don't know, a couple months ago. There was a 1 million share print, and it started going one way, and then it whipped around and bit me on the ass. But Schlumberger, I love just because she's got really good ATR as well as good options. Another one that I really like is CVX, and same thing. She's got really good options, and she's got really good intraday movement. But another one that you guys all know that I like is MRO. And this is a really nice, inexpensive stock that has really good options. And this is one that the lower priced stocks often have really good options, and they're really good for beginner options traders too, because you're not risking a whole lot of money. Whereas if you try to learn options trading the Googles of the world, what typically happens is your first trade you make phenomenally good money, and then you get hooked, and then you start putting on huge position sizes, and then you lose it all. And I don't want that happening to anyone. So please, please, if you're new to options, paper trade. But MRO is a good one. Another one I personally like is RSX. It's the Russia ETF, but they're heavily oil dependent. So that's going to move with oil. Some other good ones with decent options are Valero. Apache is not as good at options, but they're okay. The options aren't great, but the movement is pretty good on Apache, as well as Anadarko, APC. So those are some of the names that I really like. And so look at this, look at the chart. You guys are all fairly decent chartists in here. BP has really good options too. I used to trade BP a lot, and for some reason, I think it was Steph talking that she didn't like BP, even though I like BP. I guess I stopped for some reason, but yeah, BP's great. Just be aware, and actually, I like some of these companies that trade on other exchanges, because you could take advantage of some gaps, and I do this a lot with Rio Tinto, RIO, where you can actually take advantage of some of the gaps, because BP, for example, does trade on the FTSE as well as possibly other exchanges. I'm not familiar, but I know for sure that BP does trade on the FTSE. So, okay, so let's see, when I am swing trading, what is my favorite way to trail my stop? Unless I'm away from my computer, I typically do not put stops in on my broker platform, but I have mental stops, and so a lot of times I'll tell you my general trading is on swing trading. Most of my swings are fashioned in such a way that if they go to a full loss, I'm okay with it, because I've structured it in such a way that I have a really good reward to risk ratio, and I'm okay. I'm not trying to stop myself out prior to my target being reached. But that's on my swings. For day trades, then I do have stops based on levels, if that makes any sense, Laura. Let's see, there's too much space in between the questions and the answers, so I can't tell if when I'm coming and when I'm going. Okay, so I was not able to, what I actually did on Netflix yesterday, I tried to get in on a reverse iron condor, and I was more bearish on Netflix, and so I placed a trade where I was going to make money if she gets below 180. No, let's see, 185, I believe. No, that wasn't it. Let's see, what was it? 195. I had a 195, 197.50, And then I did a 217.50, 220 with the idea that I was more bearish, and so I didn't need her to come down as much, and I figured if she was really going to blow out, she was going to blow out big. So those were the levels that I had, and I didn't get executed on my trade, so I didn't do an earnings trade. And let's see, had I done it, had it gotten executed, I'd be sitting at a loss right now, although that can change between now and Friday. So that was the particular trade that I put in as an order, and I just didn't get filled. So what I didn't do, and I should have done this, is taken some pictures of the options chain. But so in the case of Netflix, I think we did look at the straddle, and the straddle was going to cost, what was it, $15 or something like that yesterday. And so had you done that, and let's see, we were at, what was it, 202 roughly, 202.50 was, and this goes to why I do not do straddles on these high flyer names like this, is because there's that time that you can get really burnt. So we looked at, I believe we had priced in a 202.50 straddle that was something like $15 plus or minus. And now we're looking at, what, 480 on the put side, $1.50. So you'd be able to sell it for $6.30 right now. So you've taken over a 15 or 50% loss on this trade. Not only is it 50%, but it's significant dollar amount. And so I showed you several other trades that if they didn't go well, you'd be losing 50 cents a dollar, $1.50, instead of taking, what, $7, $8 loss. So that was my Netflix trade that I did not get executed on. Okay. I don't have, I did, it's there. How bizarre. I don't know about that stuff. Okay, so I'm totally out of sequence with what you guys are asking and everything, but so if I don't answer, ask again. That's the best thing I can say. So intraday, I have not been following Netflix because I've been following some other trades, but she gave you some really good day trades, and I'm still looking at, and this is where you want to combine patterns with levels. And so right now, 200, any $100 even increment is huge on any stock. So 200 is a major level to be watched, and what I'd be looking at right now is something like a bear flag possibility. But this comes back to what Kadambi, you had asked about, was yesterday at, what, 269 and 270. You said, well, I'm putting words into your mouth, but you basically said, is it time to go short Baidu now? And so what you don't want to do is already presuppose. You don't ever want to say, okay, this is the top or this is the bottom. You know, wait for the stock to tell you that. Because as it was, my initial target on Baidu, for example, was 267. It was like right here. And as it was, I got to write it up, you know, a lot further than that. So had I already said, okay, well, at 269, that's it, that's the end of the run, I'm going to get out. Not only am I going to get out, but I'm going to go short. You would have wiped out all your profits. So let the stock tell you when to get out. This was one of the hardest lessons I had to learn, is to let your winners run. And I do want to say, though, that you still need to get out at your exits. You need to get out at your targets, because sometimes they will reverse on you hard and never run anymore. So scaling is this perfect opportunity where you can lock in some profits, and then you could let the others either run or come back to break even, which is what I did on the Tesla trade today. Absolutely right, David. Cut your losses short. Let your winners run huge if they can. At least give them an opportunity to run, right? Unless you have some major support or resistance. You know, at that point, you could almost be guaranteed that you're going to have at least a pullback, if nothing else. So go ahead and take your profits and then get back into the trade again. Or you could leg into a spread, which I'll go over at some point, but not today. Okay. Any other stocks you guys want to look at and discuss any trades? This is your time. Ugh. Sniper, are you asking about this one, or? It's an inside day. There's nothing to be done today. I'd like to see a breakout, and I don't know if this is going to be something that breaks out sooner or later, but you almost have to, on something like this where, you know, the second, third day doesn't show you anything, you almost have to have a fairly, and in this case, it's over $1 bracket. You almost need a breakout of that, or at least when you get near, you could also say, okay, well, this was huge resistance, and I could go short here with the idea of just putting in a stop loss just above it, or vice versa. You know, she comes down to this level, which is support, or even the 1250. Watch the 1250, because you have a touch here, and you have a, you know, 50-cent increment level, and go long with putting a really tight stop loss, and that way you've got $1 potential going up with maybe a, you know, 5-10 cent stop loss. We've got some other earnings and just political stuff going on in the healthcare names. So always be mindful that you do have, you know, when you're in something, even though that particular company may not be coming out with earnings, that you can it can move in sympathy with some other name that is coming out with earnings. So always be careful in earnings season that you're not swinging, or at least you understand the swing risk. I shouldn't ever say, don't ever trade something, but at least be cognizant of your risks. Okay, so Apple. Trying to remember how I drew these. This doesn't quite look like a fib fan line. Yeah, we came up to pretty good resistance support line where we've had multiple touches today, and I'm in just a little wild trade where I'm not risking very much on this one, but as of right now, Apple will typically give you a good 50-cent trade intraday as a minimum. And how I like to trade Apple intraday is to do 50-cent enter on the zeros and the 50s and go from there and then get out. And remember, I don't try to get, I'm not trying to get the first eighth or the last eighth. So a lot of times I'm only going for 35, 40 cents of that 50 cents. But I like to just go ahead and when we come up to a major level, this was one that you could have, if you had gone in long, just put in a stop loss real close underneath it, and if you had gotten in here short, put your stop loss just right above it. And intraday, what I like to do on anything that where I'm looking for a 50-cent move in the stock, my at the money option is going to give me a delta of 50, right? So that means for a 50-cent move, I'm going to roughly make 25 cents, but I don't like to do at the money, so I'll either go in a little bit in the money or out of the money, and my preference is to go out of the money, but I want to make sure that if I'm only trying to go for 50 cents, then it's a real toss-up as to whether I go in the money or out of the money. On my Tesla trade, I was looking for a dollar move, and so I went out of the money, and I made 32 cents on that trade. And so on a dollar move, it's a lot easier to go out of the money and still make up your commissions. On a 50-cent move, you need to be kind of balancing out, well, what are my commissions? I want to make sure that I had a trade a couple weeks ago on Express Scripts, ESXR, where, and this was total amount, I made something like $15, and I think my broker made $16 or something like that. And So therefore, it was I had to joke with my trading buddy that all I'm doing is making money for my broker on that one. Even though I made a little bit, it wasn't enough. So you don't want to be making trades like that. You want to make sure that you're paying yourself much more than your broker. So the Tesla trade, Kadambi, is I trade Tesla a lot, and I'm looking at the 250 increment levels. And this is what I do with Goldman Sachs too, by the way, is I'm looking for entries on the 250 increment levels. So 350, and I was looking at some other things, so I didn't take any of these, but 350, 352, 52.50, and 355. Those are levels where I like entries. And in this case, actually, this was a level to watch too, because you had, anytime, looking back historically at the chart are really good places for you to look for entries and exits, because that's showing that that's where there was buying or selling. And so that would have actually been perhaps a better entry in this case than the 250, 250, although you could see that there was this area right here on the 250, 250 area. But this was one that I saw out of the corner of my eye, and I got in right here, I think, was it? I have to go back to the chat. And yeah, it was right here. I got in, and then I saw this huge upthrust, and I got out. So that was just a quick $1 day trade for me. And you could have done it with the stock just as well, but I don't do it with stock. Not on a $350 stock anyway. Okay, so does that answer your... So the Tesla, okay, so on the Tesla, what I did was I exited out of my first half because I saw that this upthrust. And so then I said, okay, well, I'm just going to hold on to my next half to either a break even, or if this turns out to be, and it started actually looking good, she still started going up. And, hindsight's 20/20. I could have exited here, the other half, for a profit too. But my trading plan was that I was going to hold on to that second half to see if it actually went to my next target of, guess what my next target was? It was, oops, it was 357.50, the next $250 increment up. And she never made it there. And so when she got back down to 355 again, I just said, okay, I'll get out for break even. Hope that makes sense. Michaels. Wow, I have never even seen this stock. So what was the print? 1980. Hmm. Does she have options? Can't trade options on her. What's the average daily volume on her? It's decent. Not awful. Well, she's tradable. Um, it's even more ideal when you get, all the other indicators. And this comes back to questions I get a lot in private messages is, is it better when you see the 4 and the 8 crossing over, and what if you can't get all your rules to fit through in line, and things like that. And while those of you who have gone through boot camp, Stephanie's 10 rules. Remember that rule number 10 is break all the other 9 rules ahead of you and trade off the print. So that's definitely something to keep in mind. And on something like this, I would trade stock instead of options. So that's another thing is, as an options trader, I'm always looking for a good options trade, but sometimes there's compelling prints where the prints are really good, they're telling me something, and I look at the options chain and they're horrible, and if it's a $20 stock, I may choose to trade that with using the stock instead of the options. Now, if it was a $200, $500, $1,000 stock, then I'll use options, or I just won't trade it at all. Remember that a real successful trader is always looking for reasons not to trade, and so at any given time there are going to be good trades out there. So why take a mediocre trade when you can take a really good trade? And sometimes that means that you just have to search harder and longer, and it's frustrating, but it really pays to take just the best trades. Oh, I know, one that I wanted to look at was Mr. Softy, because we've had some prints on that. So we had, okay, this is something that I wanted to point out, was the other day we had prints on Comcast, and I saw a humongous print, we all saw in the room, a humongous print on Comcast, CMCSA. And while 100,000 isn't, this is 100,000, right? Or no, this is 1,000,000. Okay, so those are big. So on Comcast, what we saw were a series, or at least what I noticed was we had one print, and then like 10, 15 minutes later, we had another print. And the second print was, I believe, 10 cents higher. And so to me, that suggests a direction. And even though at the end of the day, it wasn't, it didn't really show direction, I was pretty confident that since the second print was higher than the first one, that I was willing to put on a call spread on that, and I totally forgot about it at the end of the day and didn't put it on. But if you saw that Comcast went up. And so when I look at something like Microsoft, you know, we have 1.6 mil right here at 47, and then we have another mill here at 40, what is it, 43. So it went down 4 cents, but we're also trading above those prints right now, right? Where are we? Let me get to it. No, we're below. So to me, that's still suggesting that if I were to take a trade on her, that I want to go short, and options allow you to take on some pretty low risk, high reward trades. And so if I were to look at the daily chart on MSFT, and she's still really bullish, but she's far away from the 8, and so she might come back down to 77, possibly even 76, 75, or 83, 5/8, 7/8, somewhere in here in this area. And so this might be an opportunity to take one of those lotto trades on her at the end of the day, where you could look at something like oh, and this is interesting. Don't you just love it? So we have those prints, and then look at the volumes here and here, your 75 and your 76s. So here's an opportunity to do something like this lotto play. And in fact, somebody just did 3,900 puts. Was that you, Ron? Okay. Regardless of earnings next week, I'm looking at just an overnight swing, possibly on something like this. Because I see the series of huge prints. You know, that's 2.6 million right there. Okay, so it was Steph then. All right. And if, you know, if tomorrow she comes down to, let's say, 76.50-ish, the delta on this is 10 cents, right? So there's a real good likelihood that you could buy this for 6 cents and turn it around tomorrow and sell it for, you know, 12 to 15 cents. And if you don't like those kind of returns, you can always go higher in strike price or fashion any other trade. But, you know, this guy could very well be just trying to scalp, or it may be that he knows something that we don't, and he is going to get a much greater move. But this is really ideal when you can see some kind of options trade along with, where's my print? Along with prints. So that's one way you could trade using these dark pool prints like this, and a lot of times when you're buying out of the money 5-10 cent options, it's going to be really hard for you to recover, especially a 5-cent option. 10 cents maybe you could buy, sell it for 5 cents and only lose 50%. But if you're buying an option for 5 or 6 cents, it's going to be really difficult if the trade doesn't go your way to get out of it for a partial. And so only put on as many contracts as you're willing to lose. At 6 cents, if the most that you ever want to lose is $20 on a trade, buy 3 contracts. If you're willing to lose $50 on a trade, buy 8 contracts. If you want to do 100, or if you're willing to lose 100, buy 16 contracts. Only put as many contracts to work for you as you're willing to lose on these. And if it comes back to where it rewards you, it's a good deal. And it's better than buying lotto tickets, because at least you have probability in your favor because you have prints. All right, full shoulder harnesses. What is happening with the indices? Oh wow, we just broke 149. Woohoo! It's getting exciting now. See, I don't know what the symbol is on this chart. Let's see, where do I have another chart? Pull this one. All right, help me out, you guys. What was the symbol for the Dow 30? Having a senior moment, you guys. That's the Russell. So why isn't it not? There it is, DJX. So one of the things I like to do is always compare what the actual index is doing. When we're reaching these major levels, I always like to look at what the major index is doing as well as the ETF, because sometimes they're like a penny off, and one will tell you, oh, obviously it was a tweezer top, versus the ETF may lie. And typically when you compare, it's the actual index that's telling you the truth. So that's why I was just looking for this one. All right. So, what else? All right. BRKR. Ugh. This looks like your stock, Roxy. Pretty broken out there. Yeah, looks good. Not my style of trading, but looks good. All right, let's see, Facebook. Facebook shook me out, but that's okay. Actually, I shouldn't even say things like she shook me out, because I did exactly what my trading plan called for, so that was okay. She's still really strong. Yeah. So Facebook is another one that you could trade intraday using options, using basic options, meaning just buying calls or just buying puts. Levels that I really like for entry are the zeros and the 50s. And then for exits, I like watching the 20s. Well, I like watching the zeros, the 20s, the 50s, and the 80s. And I will usually cut the line by 2-3 cents on all of those levels. Okay, any other stocks you want to talk about? What are the banks doing? Banks are really weak. Actually, we're still in a lot of just noise on the banks. I mean, there's some good intraday movement, but when you look at the bigger picture and you go out, it's we're trading in noise. GS is a great example of something that could have been day traded really well. It follows a bunch of what Stephanie teaches, and that is on earnings. When you have something that goes from a positive to a negative, or vice versa, a negative to a positive, that really shows strength in whichever direction it's going. So in the case of GS, GS popped up on earnings and then started coming down. And then what was really beautiful is this candle right here. It's an up thrust to get back to this area which is where a lot of people closed out their or entered their trade prior to earnings. So anytime you get pretty much, even though this isn't a true gap fade as such, it's coming back to an area where you had a closing price. And anytime you get there and you have an upthrust like this, that's a really good short and shows a lot of weakness for a short trade. Now, had she popped up and gone above again, then that would have shown real strength. And then, you know, you might as well buy a 300 call or something, because that would have been really strong. But as it is, she came right back to this area, couldn't make it, and then started falling. That's a really good short entry on an earnings follow-through. And these are different type of things that you look for on earnings. And this is ideal because time-wise, you know, this is an hour after the open, and so you have quite a bit of IV crush already, and so your options aren't going to cost you very much, versus had you gotten in at the very moment that the stock market opened. Any other trades you guys want to look at? Seven more minutes. Snap. Oh, my nemesis. Thanks, Rockstar. Actually, I have never ever traded Snap, so I shouldn't say it. She's my nemesis, but in general, I personally don't trade IPOs. I like to have at least a year of history, and see, there was a print on, actually there's been several prints on Snap, right? This is interesting. I take it that's the week of earnings in November. You want to talk about a specific trade? You know what works the best if you want to learn options during these options corner sessions is to have a mapped out trade. So not only are you looking at a stock, but you've already mapped it out as to what your entry, target, and stop losses are. Because right now I'm not seeing anything on Snap, and I don't know what the prints were. You guys have to tell me that. But it looks like Hmm. I don't know. Are you looking at kind of a bull flag here, possibly? Today's candle isn't saying anything. You know, people say that, ask that a lot. And what I have found, especially doing earnings, is that I find that the options don't really tell you because you don't know if they were bought or sold, and you also don't know if there was an underlying stock position in it. So a lot of people say that, well, if there's huge open interest at a certain put strike that's lower, then the stock has got to be going in that direction, that there's more activity in the puts, the stock's going to go down. If there's more activity in the calls, it's going to go up. And what I have found from experience is that it's not necessarily true. So what I try to do is not get biased. And that's the whole thing with indicators. Looking at indicators is, it's good to look at indicators. It's good to study them. It's good to look for divergences. It's good to look for convergences. It's good to look at all this, but what you want to do is make sure that you don't get biased and then get to where you're just looking at that, and then you're looking for all the reasons to support your bias. You actually want to do the other way of look for all the reasons to find things that break your bias. And then if you can't find anything wrong with it, then it's a good trade. I hope that makes sense. Another analogy that I was also taught when I was first learning was that, some things should yell out at you. It's like if you're going to the grocery store and looking for something to buy. Let's say a tomato. Okay, if you have to look at every single tomato at the grocery store to try to decide which one is good and which one isn't, that's not really good. Most times you could immediately say, this one is, well, maybe you can't say that this one is good, but you could definitely pick out, this one is really bad, I'm not going to buy that one. Okay, so it should be somewhat a natural selection of, this is a good trade and this isn't. Don't try to make a mediocre trade into a good trade. Okay, with that, it's 2 o'clock. I'm going to turn this over to Stephanie. So thanks, guys. And remember, bring trades. That's what I want you guys to do is map out trades, get your entry, exit, stop losses, and then we could go over different ways to do options trades on those, okay? And that's where you really start learning how options work, is by looking at the different options that you can do on options. All right? Happy trading, everybody. Here you go, Steph. It's all yours.